Okay, folks, welcome to part 3 of our series on our Amazon ratio strangle trade. And ratio strangle, as a reminder, is when you put an unequal number of options on one side of the strangle. In this case here, we're selling premium, therefore we're selling options. And in this case, we're bearish on Amazon, so we are selling additional calls versus puts. And it's twice as many puts versus calls. Now, we've already rolled down this trade once, and we have logged a profit so far on the call side of $245.04. So before we go to the trade, let's first take a look at the chart. Because remember, while we're big fans of Tasty Trade really doesn't take into consideration the technicals. In fact, I know Tom Sosnoff, he has a disdain for technical analysis, which is fine. I respect him nonetheless. So what I want to point out here is that as we're considering a roll down of Amazon, certain things have occurred. Yesterday was a Fed meeting, and the markets did not like what the Fed had to say. And the markets took it on the chin, and they took it on the chin very sharply. Now, our trade here with Amazon was no different. It broke down, and it broke down hard. In fact, you could see that this week we broke down out of multiple types of formations. One, you could call it a head and shoulders setup, left shoulder, head, right shoulder, neckline broken. Here would be your neckline, 45-degree angle. There you have it. Another way of looking at this chart from a technical perspective is that we were in a bear flag setup, meaning a uptrend that was suspicious, meaning that we weren't probably going to get a V-shaped recovery on Amazon. So we took our crayon out and said, you know what, let's identify when to short Amazon, and that would be a breaching of this lower band of support. They reported earnings, and they were hammered. They broke that support level. They broke the neckline and the head and shoulders setup. This was a short all day long. Now, here's where things get a little bit dicey. Remember, we have been bearish on Amazon. So we need to ask ourselves, is our bear thesis that we had a couple of days ago still as bearish, or perhaps are we a little bit more neutral than we were just a couple of days ago? Let's do some analysis here. Well, on a weekly chart, you could see that we are at support, as noted by support in purple. If we break it, we're coming down here to around 83.21. Last tick on Amazon was 89.77. Let's go to a daily chart. Now, the daily chart, it looks as though we're probably going to go lower. It looks like $84 per share is going to be the next target. This is the overlay of the algorithms. We're using TrendSpider, 35% discount code below, automated technical analysis. And you can see how they automatically popped up for us. Weekly support on top of a daily chart. And at current, we're down below it. So it looks as though we're probably going to go lower. We have one trading day left to go. Note as I'm doing this, I professed this the other day, that you should make your adjustments when possible in the final hour of trade. So we are in line with our normal strategy of rolling when it is appropriate. Because remember, you have the institutions that put money to work or take money off the table in the first hour and the last hour of trade, because that's when there's the most liquidity. If you roll in the middle of the day, you run the risk of getting whipsawed on your trade, and we don't want to do that. So at current daily support, we're down below weekly support. Let's bring up a daily trend line. In all probability, you can see what I just did. I'm going to take it off. I'm going to put it back on. This is where we're going down to around $83.50 to $84 per share. So that's about $5 below where we're at current, a little bit more than that. So I think we're going to stick with the ratio strangle, meaning I'm not going to go neutral on the trade and become balanced between puts and calls here. I'm going to stick with the trade that we have at current. Now, what would change my mind? Well, if I saw buyers come moving in and they close the shares higher on the day between now and the close, well, then that might change my mind. I might want to get neutral on the trade, equal calls, equal puts, but it doesn't look like that's going to happen. Let's drill down to a 30-minute chart. Nothing really bullish happening here. In fact, we broke down below weekly support, as we pointed out before on the daily chart. This is, again, a 30-minute chart, and we're looking to see whether or not we're going to rally. And while there's still plenty of time for it to happen. The probability of it happening is improbable. They tried to rally it. It was rejected at resistance. So I think that we're safe here to roll our trade. Let's go to it now. Okay, so here's Amazon. You can see the P&L here. We're down on the trade $350, almost $351, or 50%. But don't forget, in part 2 of this video series, we had already booked profits of $245.04. And when you expand this out some, you could see that we have another profit of $215 from the 6 contracts that we have sold. So the ratio spread has been the wise decision to go with for this trade. Now, when we're going to look to balance this out is when we hit that daily support level that I mentioned earlier at around $83.50, $84 per share. But as you can see here, it's time. Our deltas, now what I'm going to do here is I'm going to open this trade up. I want to take a look at the Greeks. In particular, I want to take a look at the deltas. We spoke about this the other day. In fact, on both prior videos, I'm going to post the description of what a delta is upper right of your screen. And you can see that at current, our put side delta is only just above 5 relative to the put side delta, which is nearing 30. So action needs to be taken here because our delta is nearing 30. We do believe that there are lower lows to be had here on Amazon. So this delta is only going to increase, whereas there's not much meat left on the bone in terms of protection to the call side. Keep in mind that our puts are now at the midpoint, $2.80 versus only 33 cents to the call side. So not much protection whatsoever. Now, I'm watching the markets. The Dow Jones just went positive. I'm watching the NASDAQ composite because that's more relative to the Amazon price action. So as we're watching the indices, as we near the close, we're going to keep the same strike. I'm going to investigate where I want to roll down my strikes to here. And keeping in mind that we're nearing a 30 delta, I need to be a little bit more aggressive with this trade to protect our put side, but not overly aggressive because we know there's support down below. I'm kind of liking the 110s. Now, that's only a little over 10 delta, but don't forget, we're trading twice as many call contracts as we are put contracts. And at some point in time, there's going to be a counter trend rally on Amazon, and we don't want to get too aggressive on our strikes because that rally may be very, very ruthless, and we may end up protecting our call side. So let's roll the calls now to 110, to a 110 strike from 117. Okay, so same number of contracts, same expiration date, different strike. Now, before we make this trade, I want to point out that we have a profit on the call side. We're going to roll this trade down. So this is going to disappear and it won't be reflected in our P&L, much as the prior call side profit we booked of $245.04 is no longer reflected in our P&L. In fact, it's showing as a loss, when in reality, we actually have a much smaller loss on this trade than what the P&L shows. So let's do our roll. Folks, I didn't follow through on that trade. And the reason why is that I didn't like the premium, to be honest with you. And also, I'm pretty confident that we're going to head down lower here. And I think that we need a little bit more protection on the trade. So rather than being so conservative, I want to be still conservative, but loosen up on the reins a little bit. So what I'm going to do here is take a look at the December 16 probability analysis. Now, using a 1 standard deviation, which most traders go with, the probability of trading above 105.74 is only around 15.5%. But let's toy with this a little bit. Let's go with a 75%. And it looks like it could be a little bit more liberal, maybe rolling down to a 108 versus rolling down to a 110 strike, which is what I think I'm going to do because I'm very confident. Let's go to the chart, see how we're poised to close here. Amazon, not much happening into the close. Probably going to make lower lows. So we're going to roll this to a 108 strike. Okay, we're back to the roll. The trade has not been executed. We were at 110. That would have generated an additional $198 credit. But I want to go down to the 108s. This balances out my delta a little bit better, still skewed delta-wise to the put side, but don't forget we have twice as many put options. So I'm going to go with the midpoint here. That'll generate a credit of $288. Let's put this trade in. Before I do that, actually, let's see what the P&L is on this current trade. 215.05, unchanged from a moment ago. Now let's do the trade. All right, it's been a few minutes since I put that trade in. Usually it's best to sometimes take a walk away from your computer after you put your trade in. Sometimes you're reluctant to do so. You're tempted to adjust your price. You're afraid you're not going to get your fill. It's really best just to relax and let it wait for a while. If you're familiar with psychology at all, trust me, they play games with you with the options market. Automatically, you'll put your offer in, and they'll take the bid down just to mess with your head. That'll normally happen on less liquid options than Amazon, but this is a fairly liquid market for Amazon options, so I'm confident that we're going to get filled. It's just a matter of getting an uptick here in Amazon for only a brief moment and get some call side buyers moving in. So we're watching the Dow go positive right now. Not much action coming in under the NASDAQ. Still basically where it was a few minutes ago, maybe a couple of ticks higher. We're seeing some buyers of the NASDAQ. There we go. We just got filled. I noticed that the NASDAQ comp just caught a bid. And right when it did, our trade got executed. So let's go back here. And here is the new trade. We're still showing a loss, right? $548.92. But that doesn't tell you the entire story. We've already rolled down calls twice, booking profits of tranche 1, $245.04. Tranche 2, which is what we just rolled out of, $215.05. So we're sitting with a realized profit of $460.09 at current versus an unrealized loss of $551.92. So on the trade, we are down an unrealized $84.91. But if and when we do get a rally, of course we're going to get a rally at some point in time, on Amazon, you're going to see the value of the Amazon options really deflate in terms of IV percentile or IV ranking because they're very expensive at current. In fact, I didn't go over that as I should have. Let's go back and take a look at the value of the options as measured by IV percentile. Now, I went over this pretty heavily during the first video, but it's worth repeating. You want to sell premium on options that have a current IV percentile greater than 50%. What this implies, current IV percentile of 60%, implies that over the past 12 months that this is measuring, the options are fairly expensive. But if we do get a rally in Amazon, this IV percentile is going to decline, and so are the value of both the calls and the puts that we put on the table. Not to mention the time decay that is really starting to kick in now on that trade. So while we're down just shy of $85 on the trade, on any rally, I'm very confident that we will begin to see a more pronounced profit on the trade. And when we do get down to around $85, $84, we're going to look to lighten up on the call sides, maybe go neutral, meaning 3 puts, 3 calls, and just realize profits on the call side and get flat, get neutral on the trade because we're bound to get a rally at some point in time. And that's it. Thanks for your time today. Like, subscribe. Don't forget to join us live every Thursday night and Sunday night, 6 p.m. Eastern Standard Time on YouTube. If you are enjoying these videos, please tell a friend. And don't forget, you want the trade alerts when I send these trades out? Join the Contrarian Trader. Get 14 days free. And you also get TrendSpider for free for a limited time only if you join the silver and gold level membership. Thank you and take care.